Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Kwon Yi Good Evening. Today is Thursday, February 26th. I'm analyst Jeng Jada. Remember the 3 things: like, subscribe, and share our channel. If you have any complaints or questions, feel free to leave me a comment. If we don't have time to answer your questions during the show, I'll make sure to address them one by one in tomorrow's class. That's right, you heard me, there will still be class tomorrow. Even though the Taiwan stock market will be closed for the 2/28 holiday, our global network program follows the US stock market. So as long as the US market is open for trading, our show will continue as usual. So tomorrow, even during the 2/28 holiday, we'll still be online to analyze the US stock market and talk about all kinds of international news. If you have any questions, whether it's about US stocks or anything else, just leave me a comment. If we don't have time to answer your questions during the show, we'll find time to respond to everyone tomorrow. Hey everyone, good evening. Checking the chat now. I just started. If you click the wrong link, no worries. Since there's another show tomorrow, I disabled that link to avoid confusion. Evening Mei Naizi, Yulun Ji, Zaifei De Yu, Xiaomao Love, Anna Ya, Kipao Shui, and Shifo. And who else is here? Let me check. IIS voice, right? Hector, good evening to you too, and good evening to everyone tonight. So Ice Boys asked, how should we view the movement of Yagoo-sons after the Trump-Xi meeting? Well, it depends on whether the Trump-Xi meeting can really produce any results. Right now, it's estimated that the Trump-Xi meeting might happen between the end of March and the beginning of April, basically before the Qingming Festival. Trump is expected to visit then. Trump's visit to Xi Jinping around late March or early April is oddly timed near the Qingming Festival. If successful, this could boost US, Chinese, and Hong Kong stock markets amid the trade war. But the key is you have to see what exactly they talk about. Honestly though, if you look at the current capital flows and momentum in Asian stock markets, the hot money isn't really going into mainland Chinese stocks or Hong Kong stocks. Mainland stocks are more like a slow bull market, gradually rising bit by bit. The real hot money that's driving the indexes up and breaking new highs is actually going into the markets of Japan, South Korea, and Taiwan. These 3 markets, Taiwan, Japan, and South Korea, are being boosted by things like semiconductors, DRAM, memory, and other related industries. Asian capital is mostly concentrated in Taiwan, Japan, and South Korea. Regarding capital flows after the Trump-Xi meeting, it depends on the discussion's success. While good talks might help China, the primary beneficiaries remain Taiwan, Japan, and South Korea. Just keep those 3 in mind. All right, Linda GB, good evening, and I love Jolin, good evening to you too. Caesar, good evening as well. After greeting everyone, as always, just a quick reminder, we'll still be doing a live stream tomorrow, okay? We'll still have a live stream tomorrow. All right, first, let's take a look at today's investment highlights. What's the first one? What exactly is being paid for Trump? Actually, whether it's the US federal government or the Trade Policy Committee or even the federal government as a whole, what kind of path are they paving for Trump? This ties into what a student just asked about the Trump-Xi meeting. In order to pave the way for the Trump-Xi summit, they have to first offer some attractive incentives, especially to China. So what kind of incentives are they putting on the table? After all, you have to show goodwill before taking tougher measures. You can't just go in hard before the end of March. With Trump meeting Xi soon, it makes sense to avoid incidents. That's why new policies are emerging today to pave the way for the visit. So, what exactly is being paved? Here is the breakdown. In addition, when it comes to geopolitical risks, there's really no need to panic or worry at the moment. As for so-called black swan events, right now the only one is Iran. But whether this Iran black swan will stay a big swan, turn into a smaller swan, or even shrink down to a chick, we'll just have to keep watching and see. Today, I'll also share some updates on that. On the industry side, of course, the whole market's attention is focused on Nvidia's earnings report, which was released early this morning. The last of the Big Seven's earnings reports, Nvidia's, has now been released, and the results are definitely impressive, really outstanding. But even though the numbers are so good, does that mean the stock price will just keep climbing higher? And will there be a chance today for the other 6 giants among the Big Seven to rise along with it? That's still something to look forward to. So today, I'll walk you through that as well. So what exactly are the highlights and noteworthy points in NVIDIA's earnings report? And aside from NVIDIA's stellar results, there was another company releasing earnings at the same time, a software stock called Salesforce, which specializes in customer relationship management software, or CRM. So what about Salesforce? Was their earnings report good? Honestly, their report was pretty solid too. But why did Salesforce's stock price drop sharply by 6% in after-hours trading in the US market today, despite the good results? What exactly happened? We'll be tracking that for you as well. Also, there's another industry. Recently, we've seen Bitcoin keep dropping, right? Cryptocurrencies have been falling across the board, whether it's Bitcoin, altcoins, or stablecoins, basically anything you can think of. As long as it's not a physical currency, all these prices have been dropping. And of course, that directly affects related cryptocurrency exchanges and many crypto-related issuers and producers. But here's something to keep an eye on. Recently, there's been a stock that kept falling, and now at its current level, some strange signals have started to appear. Coinbase. As for Coinbase, in terms of its business and fundamentals, it's been making some strategic shifts and breakthroughs. So what exactly are these business shifts and breakthroughs? And does their current technical position make them worth paying attention to? I'll be giving everyone a detailed update on this tonight, so stay tuned. Oh, and hey, Peter Liu, good evening. No wonder soybeans are surging. Soybeans are really taking off. That's because, well, hey, good evening, Yu. Every time I see Yu, it makes me think of Citron. Anyway, soybeans are surging. And of course, one of the main reasons is that everyone's maybe expecting that, Trump and Xi Jinping might have talks, which could increase demand for American soybeans. That's basically what's going on. Notice how soybeans, corn, and wheat, bulk shipping stocks have been restless lately. Don't buy blindly. Remember, Evergreen Marine isn't a bulk shipping company. Companies like Xinxing, Uming, Huyang, Taiwan Navigation, and China Navigation are key in bulk shipping, transporting coal, iron ore, soybeans, corn, and wheat. Gravel and cements are also vital to the sector. So in the very short term, these companies might benefit a little from the so-called increase in trade imports through the Xi-Biden meeting. And that's basically the idea. If there's time in the future, I'll add more details for everyone. Anyway, by the end of March or early April, we'll take another look at what's discussed at the Xi-Biden meeting. All right, and of course, tonight at around 9:30, we'll first take a look at some high-frequency data together. Specifically, the number of people filing initial and continuing jobless claims in the US for the week. This data will be released tonight at 9:30. Let me give everyone a preview. For initial jobless claims, the previous figure was 206,000, and the forecast is 215,000. For continuing claims, last week's number was 1.869 million, and the forecast is for a slight decrease to 1.858 million. So at 8:30 or 9:30 later, we'll track this high-frequency data together. If the job market remains stable and the number of people filing for unemployment benefits stays relatively low, it means the job market isn't as bad as some people might think. It's not that bad, not that much of a collapse. In a way, this tells us that the chances of the Fed cutting interest rates in March go down. So unless we see a sudden spike in the number of unemployment claims when the data comes out at 9:30, some Fed officials have said that maybe AI will replace a lot of jobs in many companies, so companies might start laying people off because AI is taking over a lot of positions. If what they say is true, then the unemployment rate or the non-farm payroll numbers for February might not look so good, and I think February's numbers will come out next week. Next week is March. I think the latest US unemployment rate and non-farm payroll numbers for February will probably be released on March 6th. Usually at the beginning of each month, they announce the data for the previous month. So if the related non-farm data is released in early March, at that time, people will be speculating whether there's a chance for the Fed to cut interest rates in the decision announced on March 19th. But based on current overall estimates, there's more than 60% chance that rates will remain unchanged. The probability of keeping rates unchanged is over 60%. That's some additional data I wanted to share with everyone. All right, Y90 asks, excuse me, teacher, if I want to invest in the Japanese market, which stocks would you recommend? Wow, I haven't really studied the Japanese stock market much, but actually, In our group, the sub-brokerage includes, if I remember correctly, Japanese stocks, Hong Kong stocks. I think you can buy all of them. As for Japanese stocks, we often provide a lot of related reports through our brokerage, so you can also get those Japanese stock reports. If you're a client of our You Want to group, I think you can just ask your broker directly and you should be able to get them. So for the Japanese stock market, we actually have professional analysts who specialize in researching Hong Kong and Japanese stocks. They're really good at what they do. Regarding those Japanese stock reports, some are hard to grasp since we aren't familiar with that market, yet some stocks have skyrocketed. Feel free to ask our brokers for those reports. Good night, everyone. Patrick, is it 1987? Good night. Alright, okay, the date is getting close to Qingming Festival, and honestly, I still feel a bit of PTSD. Anyway, when Qingming actually gets here, we'll take another look and see what the situation is with the Xi-Trump meeting. Just wanted to add that for everyone. Now, moving on to the official statements, here's the key point. Speaking of the Xi-Trump meeting, why did I mention at the very beginning in the investment focus that a lot of current policies are gradually paving the way for Trump? What kind of path are they paving? The first is laying the groundwork for positive progress in US-China trade negotiations. What's the second path being paved? It's for the midterm elections coming up in November this year. So you can pretty much see that starting now, it's already almost March. There are only about 7 or 8 months left until November. In these 7 to 8 months, Trump's policies, Trump's promises, and Trump's incentives will be rolling out one after another. Or Trump's achievements, he has to make sure they really take effect in these 7 months. Otherwise, if voters don't see him, he won't be able to stay relevant. So in the next half year or so, there will be a lot of policies coming out, most of which will benefit the economy, help with inflation, and improve people's lives. You'll definitely see these things happening. That includes, for example, the U.S. Trade Representative, Greer. You need to remember this name because the Trade Representative Greer will be making frequent appearances and statements. Didn't Trump say that the IEEPA was ruled invalid by the Supreme Court? Well, on that same day, last Friday the 21st, Trump immediately said that even though it was ruled invalid, he could still use sections 232, 301, and 122 to keep the tariffs going. So even if he can't use the IEEPA, he can still rely on these other provisions. He can impose a 15% tariff, right? 15%, and he can just go ahead and enforce it. Can he do that? Yes, he can. Now, Greer said, here's the key point. If this 15% tariff really goes into effect, does that mean everyone gets hit equally? Every country, every industry, every company all doomed? No, he said that for some countries, the tariff might go up to 15%. For some, it could be over 15%, depending on international negotiations and existing agreements. Essentially, his statement just means talks will continue among nations like the UK, Taiwan, and Japan. Currently, the discussed average tax rate ranges from 15 to 25%, generally settling around 15 to 20%. Whether the rate will end up above 15% or below depends on what gets discussed next, like which things will be exempt, which ones will get tax rebates, and which industries might not get exemptions. Honestly, this stuff is really complicated. So basically, anything that wasn't settled before the Supreme Court ruling, I can tell you, even after the Supreme Court decision, these things aren't going to be settled quickly either. Whether there's a ruling or not, honestly, it doesn't make much of a difference. The verdict itself doesn't really have a big impact. If Plan A doesn't work, they'll just switch to Plan B. That's all. That's basically it. So that's why so many countries, companies, and industries have been negotiating all along. They'll keep negotiating. Per Greer, some tariffs might be 15% or even higher. Crucially, these aren't new tariffs specifically targeting China. That's the point. Other countries negotiate as they always have, regardless of the rate. But with China, they aren't imposing new tariffs on you. That's how it is. Whether it's Trump or the U.S. Trade Representative Lighthizer, before Trump's visit around the Qingming Festival, they extended what you could call an olive branch, a so-called olive branch for trade negotiations. They're basically saying, I'm not going to impose new tariffs on you, I'm imposing them on other countries, but I'm not imposing new tariffs on China. I'm keeping things as they are. If you remember clearly, at the end of last year, Xi Jinping and Trump had already agreed on this. For the coming year, up until the end of October this year, the trade negotiations between China and the US will keep the tariffs unchanged. They won't increase, they'll just stay where they are. Why? Because of the election. That's the consensus they reached. The US also wants to maintain policy consistency with countries it has already signed trade agreements with. If you don't cooperate, I'll hit you with higher tariffs. As for what comes next, it could involve 6 or 9 industries, including semiconductors, pharmaceuticals, drones, and so on. Tariffs may vary by industry. You might ask what it means if no new tariffs are set for China. It's a strategy of courtesy before tougher steps, especially with Trump's upcoming visit. They're extending an olive branch first. This favorable approach is positive for Chinese stocks, but other sectors are all being taxed. So what should we do? If tariffs hit 15 or 20%, could the US target our semiconductor industry next? If they do, will our silicon shield be lost? Will Taiwan's stock market crash and never recover? Actually, it won't be that bad. Here is why. With Trump running for election later this year, he likely won't risk a trade war. Rising import prices would fuel inflation and hurt consumers, preventing the Fed from cutting interest rates. His poll numbers would drop, so right now he doesn't dare to mess things up. At most, he'll just maintain the current negotiation status. Second, Trump once mentioned a very important point. As long as, whether it's a country, a company, or an industry, you're willing to buy American goods or make large investments in the US, then many industries and tax rates can be exempted. This has happened before and continues today with companies like TSMC. They are investing about $165 billion in the US to set up 6 plants, including packaging facilities and an innovation center. Last year, many committed to US factories. Are they following through? Yes, investments are happening. The third point isn't just about buying American or getting exemptions. Trump also mentioned broad tariffs, setting them high. 15% generally, 25% on lumber and furniture, and 50% on steel and aluminum. He raised them so high, but there's an important caveat. The most important one, he said that if these industries, these raw materials or these components are beneficial to America's development, to America's high-tech sector, to AI, to the overall growth of American companies and the economy, then exceptions could be made. These things can be exempt from tariffs. So do you get what I mean? He listed all these things, covering everything. This tariff, that tariff, tariffs on this country, tariffs on that company, tariffs everywhere. Everyone was shocked, thinking it was scary. But in the end, he added a note, like a PS, a final footnote. Basically, anything that's supposed to be taxed, as long as it's good for the US, I won't tax it. Do you understand? In other words, even if one day they say they want to put a 50% tariff on semiconductors like TSMC, but because TSMC helps Nvidia in the US, helps AMD, helps the US AI sector, and TSMC has also invested in the US, so they'll only tax other non-TSMC companies. They'll tax them 50%, but will TSMC be taxed? No need to tax it. Will that have any impact? No, it won't. Got it? If you connect all these causes and effects together, once you understand, you'll realize that aside from his rhetoric, Trump always puts American interests first. Whichever companies, businesses, or products benefit the US the most, he won't target them. That's it. Now, as for Xi Jinping, he said to the German chancellor, meeting up is all about free trade and things like that. It's all the same. Nothing's changed. All right. Good night to everyone working. Good night to everyone working. Thanks to Caesar as well for sharing some related info about Japanese stocks. Everyone exchanging ideas is great. All right. SY, good evening. Good evening. And Melissa, good evening to you too. Hello, rookie investor. Did I pronounce that right? Hi, William. Good evening. Many are watching Japanese stocks, specifically the 5 major trading companies and semiconductors, which are both performing strongly. Buffett invested heavily in these trading companies, owning up to 10% and making a significant profit since he started years before the recent highs. He's truly impressive. Welcome to our new classmate, Rookie Investor. Okay, number zero, good evening. Okay, all right, let's continue. So besides the stuff related to Glencore and Xinyi and the trade negotiations, just keep those in mind. Also, the actual government bond yields are staying the same. The 4% midterm interest rate and the 3.09% rate cut are both holding steady at about 2 times. So honestly, there's not much difference. Really, not much difference at all. Now, looking ahead to next month in mid to late March, the Federal Reserve will be holding its interest rate decision meeting. As things stand, if this atmosphere continues, I don't think they'll make any moves to cut rates in March. But overall, the chance of 1 or 2 rate cuts this year is still there. Whether that happens in the second half of the year, before the election, or after the election, we don't really care. Anyway, I think this year, expect 1 or 2 rate cuts this year, which is still positive. Rate cuts generally benefit stocks and the economy. The US dollar index remains weak, trading narrowly. Today, it dipped 0.1%, consolidating below the 200-day moving average. We'll see if it breaks above that average. Otherwise, the dollar stays weak short term. As for geopolitical risks, ignore them during the 3-day holiday. Just take a good break, really rest up. Whether you're not trading Taiwan stocks or if you wanna trade US stocks, it's the same thing. Basically, if you can rest, then try to rest as much as possible. Let me put it this way. I think until the 228 holiday is over, everyone is still kind of in that Lunar New Year holiday mode because everyone's still on vacation, right? So after this 228 long weekend is over, if there's anything big or small, we'll have plenty of time to deal with it in March. March is basically the last month of Q1, the first quarter. So what's coming up in March? There's the interest rate decision, and then there's also the GDC conference. The GDC is around March 16th to 19th, I think. Then there's the GTC conference, and at the beginning of March, there's also MWC, which is held in Spain. MWC stands for Mobile World Congress, right? That's happening too. So March is packed with events. There's GDC, there's MWC, and then what else? The interest rate decision. A lot going on. Plus, at the end of March, Trump is going to visit as well. China too. So the impact is actually pretty significant. I think we'll have to wait and see in March. So during this 228 period, let's try to learn as much as we can, watch more, listen more, and really get our rhythm back on track. Get back on track. In this new year, I still think everyone has a good chance to make a lot of money. As for geopolitical risks, why do I say there's no need to worry too much? Do you know why? First, it's been reported that if the US attacks Iran, then Saudi Arabia might significantly increase its oil production. The reason for boosting oil output is that they don't want a war to break out and then see oil prices skyrocket. By increasing production, at least they can put some downward pressure on oil prices. As for Trump, he's still saying that diplomacy is a very, very important way to resolve the nuclear issue. In the future, if they manage to negotiate this nuclear agreement, the hope is that it will be indefinite, without any expiration date clauses or anything like that, no matter how they negotiate anyway. Iran's foreign minister has already gone to Geneva, and in Geneva, he's getting ready for the 3rd round of talks with the US. Will things move forward this quickly? I don't think it'll happen that fast. But as long as there are talks, there's hope. Talks mean there's a chance, and at least it won't turn into a huge black swan event. So you probably have some idea about the issues between Iran and the US, right? Their main sticking point is that Trump wants Iran to completely give up developing enriched uranium. In other words, they can't develop nuclear weapons at all. Second is the development of missiles. The US demands Iran stop these, fearing reckless launches or even strikes on the US mainland. Whether Iran accepts these 2 demands is highly unlikely, and for Iran to say it will completely stop nuclear development is impossible. If you can't move your main facilities and you're not allowed to develop missile technology, then basically, pulling its fangs turns a tiger into a sick cat. Without power, they lose all leverage to negotiate with the US. This will likely drag on and won't be resolved quickly. Will the US eventually launch a full-scale attack on Iran? I doubt it. Trump probably wouldn't be that foolish either. First of all, attacking Iran wouldn't be as simple as attacking Venezuela, where you could just go in and capture their president in an hour and a half. It's not that easy, because this involves Middle Eastern countries and the stability and interests of the entire region. The impact is huge, especially since Iran is a very important oil-producing country. Do you think Trump would start a full-scale war like the Ukraine-Russia conflict? I think the chances are highly unlikely, unless he stirs something up for the upcoming election. But then he wouldn't even need to run, so he likely won't act recklessly. That's why he's saying he wants to use diplomacy. Right now, diplomatic mediation is the best option, and it's actually his top choice. He hasn't said anything about war. He keeps talking about diplomacy. He's mentioned it for at least 3 days now, that he wants to resolve things through diplomatic means. So when you see all these warships and aircraft carriers already stationed off the coast of Iran, looking like they're ready to launch a massive assault, it might seem like they're preparing for a bloodbath. But in my opinion, the effect of intimidation is currently greater than anything else. Right now, it doesn't look like they're actually going to take real action. They're just trying to scare him first. Then they'll sit down and have a proper talk. I don't think there will be a large-scale attack, but some minor skirmishes might be unavoidable. For example, they might target some of Iran's underground nuclear weapon facilities and launch attacks on them again. Or they could go after Iran's flanks, like we mentioned earlier. Attacking Lebanon and so on are all possible strategies. So as long as there are talks, there's hope. But keep the black swan variable in mind. It could be a factor. Right now, it hasn't become a big one. It's just a little swan for now, but we still need to watch it. That should be enough for now. Regarding Cuba, Lin Tai reported an illegal American speedboat entry off the coast. Both sides exchanged fire, resulting in 4 deaths and 6 injuries. The State Department denied involvement. Is this serious? I don't think so. It is just a minor regional skirmish that happens all the time. First of all, even if it was the US wouldn't admit it. I mean, how could a speedboat just end up in Cuban waters? As for Cuba opening fire, whether it was legal or not, this incident really has no impact at all on geopolitical risks at the moment. So just take a look and move on. It's just a new little piece of news. Alright, let me see. I keep thinking about how to get in touch with your company's customer service or how to have customer service contact me. Okay, so if you're already a client of one of our branches, then of course you can just reach out to your account manager or call the main line. Either way, you'll be able to get in touch. But if you're not yet a client of Kuan Yin, that's fine too. Just call the main office and say, hey, I'd like to open an account or I'd like to get some related information. You can also ask them to recommend a suitable account manager for you. That works too. Just call the number on our official Kuan Yin site. There are many listed, so just find the right one. You can also ask them to recommend a suitable account manager or financial advisor for you. Right, and then good night, good evening. Okay, alright, let's continue. As for Zelensky, just take a look and that's enough. I don't think it's that important. If you were to write this news down, well, at the beginning of March, he was supposed to negotiate something, but there hasn't been any progress anyway, so the talks just keep going. Ukraine and Russia have been fighting for almost 5 years now, so watching it doesn't really change anything. OPEC, on the other hand, said that maybe on March 1st, they'll consider whether to increase oil production in April. As for increasing production, I think there might be some pressure from Trump behind the scenes, because Trump wants oil prices to drop, so he pushes for lower oil prices. Of course, that makes it harder for inflation to spike. So whether OPEC Plus will actually mention increasing production again at their March meeting, we'll just have to wait and see. But what we do know is that, as we mentioned earlier, the US, Iran, and others are involved. When you put together all this information about Cuba, Ukraine, Russia, and even OPEC, I don't think it's enough to significantly push up oil prices. Now, if there were to be a big surge, it would be what I just mentioned, the Iran Black Swan events. If that small black swan turns into a big one, that's when oil prices could really spike again. But if this small black swan ends up being resolved, say after the 3rd round of negotiations they actually make some real progress, then this little swan might just turn into an egg, meaning the risk disappears. If that happens, oil prices would naturally drop back down. So that's the situation with crude oil. Let me add a bit more about the related geopolitical risks. Now, as for tomorrow's economic data, our usual evening show will go on as scheduled. During tomorrow night's Elite Good Night program, I'll give everyone a quick update on the US PPI, the Producer Price Index, and also some data related to the Chicago Purchasing Managers. These numbers will be released tomorrow night as well. Regarding Baoxianxiang and Bokeh, financial updates are due in the next couple of days. I'll track any news and share it immediately. Alright, Habayan asked, if I buy Taibo today, will it go up next week? Every student is really interesting. Every time someone asks me, hey teacher, if I buy this stock now, will it go up tomorrow? Honestly, I don't know if it will go up after you buy it. I really don't know. Sometimes when we look at a stock, whether it will rise or fall depends on a lot of factors. There's technical analysis, fundamentals, and market sentiment. With news and other factors, can you buy today and see gains tomorrow? Honestly, I can't say for sure. Based on data, we only know if the chances are higher or lower. Regarding your question, Haiben, on Taibo rising next week, it still looks strong, mainly due to Beauchamp themes. Looking at AI stocks, for example, products must be top tier. These printed circuit boards, especially advanced narrow ones, require sophisticated manufacturing. Whether multi-layer or up to 12 layers, complexity drives increasing demand for higher grade fiberglass cloth and copper-clad laminates. For fiberglass cloth, companies like Taibo, Fuqiao, and Deheng are the key producers. So you can keep an eye on these. If these industries continue to rise, then of course Taibo still has a chance to go up. As for whether it will go up next week, the week after, or even tomorrow, nobody knows. All we can say is that at the moment, the trend and the demand in this industry are both very strong. Right now, demand is high, boosting revenue and profits. Whether the stock rises tomorrow is anyone's guess. Let's check Nvidia's financial report. We've discussed Nvidia's earnings for 3 minutes. At 9:30, US jobless claims and capacity data drop. I'll track those for you. How did Nvidia's earnings turn out? The performance was outstanding. Despite concerns over AI capital expenditures falling short of expectations, this morning's report shows their earnings remain fantastic. Impressive. Q4 revenue hit $68 billion, up 73% year over year, beating high expectations. The AI-related data center segment brought in $62.3 billion. That means nearly 90% of their $68.1 billion total came from data centers. That 75% yo-yo growth is stunning. As for the gaming business or the automotive sector, although their revenue was lower than expected, the impact is minimal. That's just a small part, gaming. It's understandable that this segment fell short of expectations because a lot of resources, including things like memory, are being used for GPU development. So as mentioned before, I think the latest, I'm not sure if it's the X60 or which version, the original model used for gaming, the G60 or G something, GeForce, whatever the model number is, the latest version of that model. For the gaming graphics cards, he said that due to shortages, like the shortage of HBM, high bandwidth memory, he has to allocate resources to GPU development and also to things like Rubina block development. So he doesn't have enough resources to focus on gaming chips right now. Gaming revenue missed expectations this quarter, but the impact is minor. Automotive is tiny at 600 million, so that miss doesn't matter much either. EPS hit 1.61, beating estimates, and the forecast is... Now, the latest estimate for the first quarter of this year is about $7.8 billion. So what did he say? Anyway, this layoff estimate is also in line with expectations, and it does not include revenue from China. So whether or not the H200 is sold in China, honestly, it does not really affect Nvidia much anymore. If they can sell, then revenue will increase, which is even better. If not, it does not make a difference, because this time, Nvidia had already excluded that from their projections when making these layoffs. China's revenue included, actually it's not just this quarter. In previous quarters, they had already stopped including revenue from China. Of course, Jensen Huang also said that the current demand for computing is just incredibly strong, and it continues to be this way. Growth, whether it's the Blackwell series, the GB series, the Blackwell series, or even future series like the Rubin series, will all keep rising, and the demand for Nvidia's chips and computing power will continue to soar, growing exponentially. So all we can say is that Nvidia's financial report is very, very good. This kind of strong announcement will definitely give the whole AI industry a sense of stability. But of course, this sense of reassurance can be stronger or weaker. Some industries might benefit a lot, while others might not see as much impact. For example, with some software stocks, AI fears grow, so some companies celebrate while others worry. Nvidia's fundamentals look great. Regarding technicals, we've discussed these two trend lines all week. Moving averages haven't changed. Basically, buy at the moving average upper edge or the lower trend line and sell at resistance. It's consolidating, but a breakout is possible today. Is a breakout likely today? It closed near 196 yesterday, and there's a chance to break through now. With the US market closed, Nvidia's up 3%. If it breaks out, watch if it opens high, then pulls back. Be careful. A breakout might gap up, then fall back into the range. If it drops back, the move failed, and it's still just trading within the same zone. So we know the fundamentals are good, but sometimes when it comes to entry and exit points, it's still worth paying attention to technical indicators and changes in market sentiment. If, technically, it looks like today's going to be an open high but close low, then don't go overboard chasing it. So I think if there's a gap up today, just let it be. If you don't have any shares, wait for a pullback before considering an entry. Just remember the upper and lower boundaries of this consolidation range. That's enough. If you want to trade, if you're buying Nvidia, just watch it for a bit. Someone asked if it'll go up tomorrow, but the market's closed, so Taiwan stocks won't move. For stocks, check market sentiment, institutional buying, volume, price, and moving averages. As Peter Liu says, there are many technical indicators to track. You must look at institutional trends, margin, and technical analysis. Master Dow theory and chart patterns like tops, bottoms, and triangles. You need to understand all these absolute basics. We can say that these things help everyone. They help you pick stocks or find better entry and exit points for buying and selling. That's basically it. They're not necessarily 100% accurate, but the more tools you have, the more ways you have to maximize gains and avoid losses. And then, what does 781 mean? Yeah, it's really, really high. As for the 781 that was mentioned, NV Idea's revenue is honestly extremely good. Really good. It's just as good as before. But will the market buy it? Given its valuation, despite today's news, watch for an open high, then drop. My concern is that good news leads to a flash in the pan, returning to this range. If so, any bounce makes no difference, just like before. The way it's been moving for the past 3 months hasn't really changed much. It's just that the fundamentals right now are excellent. There's no doubt about that. The tricky part for the market now is that when it comes to these giants fundamentals, people expect them to be good, but they want them to be even better. It's like asking a top student, not only do you want them to score a 98, you want them to get a perfect 100. And not just a perfect score. You want them to get a direct admission from National Taiwan University to Harvard, and then from Harvard straight into a postdoctoral program. That's basically the kind of expectations we're talking about for a company like Nvidia. So being a top performer comes with its own fate and its own pressures. Whether they can ultimately make that leap from NTU to Harvard depends on how AI develops in the future. That's pretty much how it is. All right, let's circle back and take another look at this. So does that mean your own investment journey will go smoothly? Jeff Lynn asked, you know so much, so does that help? Well, I think it does help. All I can say is that it helps. The more you know, the more it definitely helps. But does that mean your investment journey will just keep getting smoother? Sometimes not necessarily. Why not? It's not bad tools, misunderstood theory, or missed techniques. Often what trips us up is human nature. We often get tripped up by human nature. When the price hits your target, you don't dare to buy. And then when it reaches your selling point, you can't bring yourself to sell. Or maybe, even though the indicators and charts are clearly showing a bullish setup, you just happen to see some news or report saying, wow, the earnings report doesn't look good, or there haven't been any new orders lately. But when you look at the technicals, the chart tells a different story. Someone's buying, and the pattern is exactly like the W bottom I learned about in textbooks. So why is there suddenly all this negative news? And the revenue hasn't reached the turning point or a breakout either. So why is there a buy signal now? That's why when all these different factors like fundamentals, market sentiment, and news keep clashing with each other, our human nature tends to show its weaknesses. It's really about human nature. Sometimes you get caught up in emotional dilemmas, hesitating to buy, getting stuck holding a stock, or refusing to cut losses and take profits. That's the reality of it. All right, thanks for the sparkling water. Remember to like, subscribe, and share, okay? And also, you don't have to watch everything, okay? All right, thanks for the sparkling water. We just need to watch and listen more. That's the right thing to do. Just watch and listen more. That's the way to go. So whether things go smoothly or not, I think learning and watching more definitely helps. But human nature and luck are always involved. For more details, please refer to the book. If you just finished the office announcement, regarding the latest data, 212,000 people were processed. This is lower than expected, but slightly above the previous value. Attendance is hovering between 200,000 and 220,000, so these fluctuations have little impact. It's lower than expected, but okay. Continuing claims hit 1.833 million, below expectations and the previous value. Both claim types simply reflect the current job market. It seems like the data from the past few weeks isn't as bad as everyone thought. Of course, if the job market isn't cooling off as much as people expected, then the momentum for the Fed to cut interest rates in March will also decrease. So, looking at the latest non-farm payrolls and lower jobless claims, they suggest the job market isn't quite as bad as expected. That's the key way to interpret the data tonight. You're welcome, Eric. No problem at all. Let's try to overcome our own nature. You might ask, teacher, have you overcome it yourself? Honestly, as long as we're human, it's hard to completely overcome our own hearts. It's really hard. There will always be times when you just can't bring yourself to sell, or you don't want to cut your losses, or you just don't want to sell at a loss. These kinds of dilemmas are bound to happen. That's why sometimes we need to rely on AI, or on certain technical indicators, or on some tools to help us break through our human limitations. There are some blind spots that we just can't see ourselves. But if AI or some technical indicators can point out those blind spots for us, it can help us avoid making unnecessary mistakes. So let's all encourage each other and keep working on this together. Actually, as long as we're still on this investment journey, even if it's just for one more day, I think as long as you're still on this path, you have to constantly fight against your own human nature. It's really about battling your own instincts. As for whether, in the end, you'll succeed or fail, no one can say for sure. Because as long as you haven't left the market, the opportunities are always there. Of course, opportunities always come hand in hand with risks. There's just a thin line between opportunity and crisis. So it all depends on how each of us makes our choices. It's really about how you make those decisions. All right, okay, next up, this is NVIDIA, right? Now, moving on to this software stock. This company specializes in CRM, things like customer database management, inventory analysis, customer relations, sales analytics, that sort of thing. Honestly, their financial report looks really good. Their fourth quarter revenue was $11.2 billion, which is a 12% year-over-year growth. Also excellent. Their earnings per share was $380 million. Also great. Plus, they announced a $50 billion stock buyback plan. Isn't that amazing? Was the Q1 revenue forecast good? It was great. At $11 to $11.08 billion, it met expectations. EPS topped $3.10, also very strong. So why did the stock drop pre-market? Just one small thing. Their full year 2026 revenue guidance. At nearly $46 billion, it was slightly below the $46.006 billion the market expected. It was just a tiny bit below expectations, just a hair. And because of that, the market really went after it, kicking it while it was down. But the EPS still met expectations, and they even told everyone that as of this quarter, there are still $35.1 billion in remaining performance obligations that haven't been booked yet. They still need to be shipped out. All of this was also in line with expectations, but right now, the market... Because AI is developing so rapidly, everyone is wondering if it will eventually replace all these software companies like CRM, Datadog, and so on. Even companies that have nothing to do with it are getting hit. And then you have IBM, HPQ, HPE. Basically, HP in any form is dropping too. HPQ fell even more yesterday because their earnings report missed expectations. There's just so much going on. So when you ask whether these software stocks are really going to just keep going downhill, I don't think it's quite that pessimistic. Sure, to some extent, some parts of their business might get replaced by AI. But when you talk about these software stocks, is it really going to be like that? Where there's just nothing they can do and they just have to sit there and take the hit? I don't think so. Companies in the industry will definitely look for a way out. If you don't want to be replaced by AI, you have to find some kind of turning point or pivot. If you don't want to be the one getting pivoted on, then you have to be the one pivoting others. What does that mean? It means if you don't want to be replaced by AI, then what should you do? You join AI. If you don't want to be replaced by AI, you use AI. You join AI. You work with AI. That's just how it is. That's just how it is. If you don't want to use AI, then you might end up being replaced by AI. So like I just mentioned with those software stocks or HPQ or IBM, if they don't want to be replaced, in the end, they'll have to work with AI. As long as there's any collaboration with AI, any connection at all, you'll notice it's just the reality of the situation. If one day, say, IBM or any of those other companies I just mentioned, including Salesforce, suddenly announces that most of their operations will start making extensive use of AI, and after bringing in AI, the revenue skyrockets and grows rapidly, and AI doesn't replace their original moat or competitive edge, instead, it actually makes their competitive advantage even stronger. It's like having the heaven sword and dragon saber, like a tiger with wings. If they say that, these software stocks won't drop. They'll actually go up. See? This kind of thing is like, this wave starting in 2023 rose through 2028. We're 4 years into this bull market where everything usually climbs, yet now AI and all other stocks are dropping across the board. Cement, steel, and plastics only really started to rebound this year. For most of the group subsidiaries linked to D-theory, tech, or specialty chemicals are finally rebounding. But over the past 3 years, they've all been dropping, right? So just think about it. It's the same with these companies. In the past, the lagging traditional industries like steel, cement, textiles, and plastics, if one day they suddenly connect, AI gets involved, saying because of AI development, because AI is joining our company, suddenly our steel production has skyrocketed. AI comes in, so for textiles, before we could only weave one pattern, but now with AI, there are over 6 million possible pattern combinations. Wow, that's amazing. This has really increased the demand for textiles. Right, because one day AI joined in, so the cement production through AI's calculations and big data now knows exactly where to mine, whether it's Hualien, Taitung, or somewhere near the Heiping power plant or Xinjiang. Where should they mine next? This way, the quality and yield of the cement improve, and AI can really help with that. So if this can be linked to the company, helping boost its revenue or driving a breakthrough in its business expansion or development, then the stock price of that company will go up. AI is the same. To avoid being replaced, just use AI well. So, will software stocks disappear? I don't think it's that dire. I believe they'll find a way forward. Several people refuse to sell. Was that my mistake? Investing is about overcoming human nature and selling high while buying low. We all know it, but the point is, but where exactly is high and where is low? What I think is high, you might not think is high. What I consider low, you might think could go even lower. That's why I always tell everyone to invest in batches, take profits in batches, buy in batches, and sell in batches. This helps everyone overcome human nature a bit more easily, helps you beat your instincts. Even though it's really hard to do in practice, everyone just needs to keep learning and gradually get the hang of it. So just take it slow. Show it to your coworkers. If you can't look, let them handle it. As long as losses are cut, it's fine. Linda asked about Oracle. It's still on the weaker side right now. The issue isn't whether AI replaces it. It's not like other software stocks. Oracle's problems aren't solved yet because in their so-called AI perpetual motion machine, the amount of debt they've taken on is just way too high, which has caused their free cash flow, FCF, to stay negative. Last quarter, it was minus $6 billion, and in the most recent quarter, it's negative $10 billion in cash flow. So people are worried about their liquidity, and that's why they keep borrowing more and more. But their, what's it called again? Is it CDS? If I remember correctly, their CDS rates, which represent the default risk on their debt, keep climbing higher and higher. The probability of default is rising because everyone is worried, and people are increasingly concerned about these credit default swap products. People worry Oracle faces liquidity issues since free cash flow is negative $10 billion. They're afraid Oracle won't keep things running. In the AI race, before the machine even gets going, Oracle could suddenly drop the ball and get knocked out. That's the fear. This is why Oracle stock remains weak. It's a liquidity issue, not an AI replacement one. Despite their AI efforts, people still worry about cash flow. So what else is there to add? Regarding the stock price, notice this blue downward trend line. After breaking below it, the stock kept falling. Short term, expect only a technical rebound. But even if it bounces, it'll likely face resistance near the 20-day moving average. That's the 20-day average right here. The red line, it'll hit soon. A rebound likely hits resistance right there. It looked like it would drop today, and it did. Keep an eye on it. After consolidating at these levels, it could break lower, but it's uncertain. For now, it's still lagging. While AI's impact is unfolding, these software stocks remain weak in the short run. I'm not that pessimistic about the long-term outlook, though they're definitely struggling right now. Lastly, let's look at Coinbase. All right, so Coinbase, it's the largest cryptocurrency exchange by trading volume in the US. In fact, around the middle of last year, we talked with everyone about the concept of the 4C stocks. Back then, we were referring to 4 stocks: Coinbase, then the one that issues US dollar coin, and then there's one that does some kind of software. The one focused on cybersecurity is CRW, and then there's another one. Its rich dad is NVIDIA, meaning it's a company that NVIDIA invested in, which does AI chip leasing. That company is called CRWB. So these 4 companies, starting with C, all had a rally before, but then starting from the second half of last year, they began to decline steadily, especially as cryptocurrencies kept hitting new lows again and again, right? When cryptocurrencies keep hitting new lows, these exchange-traded currencies are bound to fall as well. Like you just mentioned, Circle and Coinbase are both dropping. But you should pay attention to why we're bringing up Coinbase again. It's because they recently announced that they're going to launch 24-hour trading 5 days a week in the US market. What are they trading? They're offering trading for US stocks and US ETFs, and it's commission-free. Basically, before this, they were focused on something else. They used to focus on cryptocurrency trading, but now they're expanding into stocks and ETFs, which means they're increasing their business scope. If this expansion is successful, of course, it could give them a chance to boost their profitability. So this information shows that they're trying to break out and transform their business. And it just so happens, why did I mention earlier that a student asked about this? When analyzing the market, what matters most? Like I mentioned, take this case. The company is strategically transforming. Beyond fundamentals, we must check technicals, valuation, charts, and news. Even with a fundamental breakout, we still need to look at all these technical aspects. Technically, this weekly chart is interesting. We shared it last summer. Since March 2024, on this weekly scale, it's a large broadening pattern. Look at this formation. Hitting upper resistance, it retreats from upper resistance. Last time, we reminded David that Coinbase hit weekly resistance. So near $400 to $450, if you exited, that's great. Now it's dropping back to the lower boundary of this large broadening formation on the weekly scale. The lower support zone. So what about this lower support zone? Right now, it looks like from last year through 2024 up to now, it's just touched it for the 3rd time, and it hasn't broken below it at all. So as long as it doesn't break below this area, I think as long as it holds here, you can keep an eye out for some selective buying opportunities around this spot. Keep watching the trend. Circle jumped 35% yesterday. It surged back in a single day after a hard drop. Coinbase also saw a big jump, maybe 10%. I've posted the weekly K-line for technical reference. Medium to long-term investors should pay attention, as this is a market low point. This low point just recently hit from $450 all the way down to $140, which is almost a 70% drop. That's a huge drop, more than enough, honestly. So from a fundamentals perspective, if there's a chance for a turnaround, if their revenue streams and business reach keep expanding, then I think it could have a positive impact on their revenue or stock price. There are other opportunities. That's a final note on Coinbase's turnaround. Now for the US pre-market. Why are industrial computer stocks so sluggish? Which stock do you mean? I'm not sure why industrial computers are so sluggish, but software is definitely weak. You're welcome, Linda. Regarding Microsoft, it's been weak lately and is forming a rounded top, meaning it may drop as it rose. It has a strong moat, but the problem is that when the software sector takes a hit, everything gets blasted together, no matter what it is. They move together. Market worries about Microsoft seem overblown. First, they have online software like Microsoft 365. People wonder if AI will replace software stocks, including Microsoft's 365. Also, Microsoft owns about 27% of OpenAI, which is constantly burning cash. They're losing cash. Revenue doesn't cover costs, so Microsoft continues funding OpenAI. Without an IPO and with slower than expected growth, they aren't seeing returns quickly. So people are starting to worry, since Microsoft owns almost 30% of OpenAI, what if they can't fully cash out in the end and OpenAI just keeps burning money? Could that end up affecting Microsoft's stock price, revenue, debt, or something else? The pressure is just too much. If overwhelmed, just take a vacation. There's no need to worry. Microsoft is a strong company. It won't be easily brought down. That's impossible. Their moat is way too strong. Nearly 70% of computers use Microsoft's Windows system. Then there's Office, which I don't think could ever be replaced. Plus, Microsoft is investing in AI projects like Copilot and collaborating with OpenAI. In this area, Microsoft is incredibly strong. Lately, AI and software stocks are being targeted, making Microsoft an easy mark. It's like those pre-market surges. Anyway, we're 50 minutes in, so let's hurry or we'll miss our trades. SanDisk rose 3.89% pre-market, with KLA 10 Core up 2.62%. Teradyne, Netflix, and Paramount also gained 1.3% to 1.9% early on. They're all rivaling Warner Brothers for new profits, so let them fight it out. US Bancorp gained 1.14%, Nvidia rose 1% in pre-market, and HP rebounded 0.88%. Conversely, Trade Desk plunged 16% pre-market on weak earnings. Salesforce's CRM also dropped 3% early on, marking a sharp drop as their full-year revenue outlook missed estimates. Occidental, Robinhood, AMD, and Intel slipped slightly pre-market, down about 0.7 to 1%. Today, the U.S. market shows a slightly positive, fluctuating trend with small gains or losses. At the opening, no major companies are pressuring the overall index. On the other hand, there are some companies that are actually up, like those making hard drives, memory, 3D NAND, or companies like Micron, and even major players like Nvidia. These important companies still have some bullish highlights, and the spark for growth hasn't gone out yet. Yeah, the Dow is holding above its monthly average, up 0.63%. Yesterday, the SOX index stayed strong, rising 1.62%. Watch Nvidia, Micron, and especially TSMC today. If TSMC performs well, the semiconductor index should follow suit. If TSMC is strong, the Taiwan market follows. The Magnificent 7 index is weaker short term. It recently hit the 200-day MA, or trendline support, and saw a slight rebound. But it won't surge back immediately. With monthly and quarterly averages acting as resistance, that's the current outlook. A short-term rebound is possible, but it may still need time to consolidate. Looking at the Magnificent 7, giants like Tesla and Microsoft have pulled back after big gains to take a breather. Some are already consolidating, so that is the current situation. Sector index investing rarely shows big gains in the short term, so focus on companies outside the Magnificent 7 to profit. But whether to keep those leaders long-term is still something to consider. Just a reminder, tomorrow, Friday, February 27th, the Yuani Goodnight live stream will go on as usual. I'll be online in the usual voice format. Even though the stock market is closed for the February 28th holiday, we'll still be live tomorrow, so feel free to join us online to chat. Alright, that's all the land info we're sharing pre-market. Please like, subscribe, and share for us. Good luck trading, and see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.